Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and also subscribe to the channel. And make sure you check out my S&P Emini future weekly trade zones. Only $50 for a lifetime subscription. 1 point pays for it all for life. Also, check out my Day Trading Fearless Patreon page where you can follow along with my portfolio for stock and options and dividend stocks. So that's it, and let's jump right into the video. In today's video, we're going to learn how to trade the Fibonacci sniper trade. So what is the Fibonacci sniper trade setup? We're going to talk about understanding what to look for, in this trade setup, what fib levels to use, and then also how to use it for targets and entries. So let's jump into the chart. Okay, so we're looking at Apple. Now, this trade is kind of similar with the pullback trade, the setup, but there's a couple little different nuances with the sniper trade setup. So what we're going to look for, and we'll kind of come back here to this trade setup right here, right, from low to high, right? What we're looking for is we're going to look for the fish hook, right? We start to make a high and then we start to roll over. If we took a trend line, this is our fish hook. We're on the other side of the trend line. And what we're looking for is, hey, we think the market's made a low. Yes, we're bouncing, but we think the bounce is going to not make a lower low. That's essentially all this is. So what we're going to do is we're going to draw our fib extension from the low, our Fibonacci retracement from the low to the high. And what this trade is this, think of it this way. When we're pulling back, our entry zone is between the 50 and the 61.8. That is our scope. Think of it as like you're hunting, right? And you have a scope on your gun. And what's happening is all you're doing is you're looking inside that scope. That's all you're looking for. And so what you're doing is wherever you move, this is what you're going to see. That's all you're going to see. So if we kind of move in here, wow, now we see the candles, right? If we move it over here, there's no candle. So think of it this way. You draw your fibs, you see it, and this is our go-to right here, our zone, right? That we're looking. When price starts to enter inside here, this is where we're like, let's get ready and let's start to actually get long the stock right here. And before, remember, with the pullback trade, we had the 38 is our target. And then the 100% level down here as our exit. This is a little different. This is where we're kind of trying to do a different risk reward, where we're risking we're risking 1 to make 2 or 3. Right? So what we're doing is our entries can be maybe in the 50 to 61, anywhere in here. You can buy here, add to the position. But if we break and we close one bar, it's not so much a wick, but it's more of a close below that 70, because sometimes you'll get a wick, a couple wicks like this, and then a rally. So you never actually would have gotten stopped out. But here you would say, let me enter here. If we close a bar below where the body actually closes, below 70, that is our exit and we're out of the trade. But as we could see on this pullback trade, it entered our scope. We get long. Yes, we take a little heat. We never get stopped out, and look at the move we have, right? Now, again, where do you take your target? That's always the tough one. But if you want, we could come back here, throw up our 38.2 and say, hey, if we're entering right here between the 50 and 60, and we know this is our stop right below, hey, let's look for this. But if you think maybe you scale in, you could start to scale out some here. Maybe scale out some more at the 25% level, right? So you could add a 25% Fibonacci over here. Scale some more out here. If it keeps going, scale more, right? Then you could let the runner run. But it's all up to you. Or you could say, let me enter here. Okay. Let's say I enter in the middle at 55, right? It's all up to you where you enter. Maybe just look to the left of the chart and try and get the best fill you can, because if you enter there, your risk is here and your reward is here, right? So it's all, there's no right or wrong way. This is part of trading. There's no, when this happens, you do this, because the market is always constantly changing. So you also have to understand what the overall market is doing. Okay. But with that being said, you could say, hey, let me enter here. If we get here, take some out. If we keep going, take some out. But at least, and then maybe move your stop all the way to break even. So if it does come back, guess what? You get stopped out at break even only on a quarter or a third of the position, because you've already scaled out 2 times, right? So now you break even on 1/3, but you made money here, you made money here, okay? And it's a winning trade, and it can't become a losing trade. So again, it's all how you want to do it, but that is the sniper trade that I really like. Another good way to look at this is, let's look at, let's try and find another, right? We see this move, right? Downtrend, bounce. We know it shouldn't break above that high, right? So we could draw this and look at this. We come right up, right? We fall, bounce right to the 50, get short, and look at this move. Okay. Now you can also play this all the way to the 100, but remember, this is your entry somewhere inside the 50 to 61%. Anything above 70 is your exit. So you know exactly where your exit. Remember, the pullback trade, we were using the 100. Okay. And we were looking to get short around the 61% versus the 50. Okay. That is a different trade where we were looking for a bigger kind of trend, give it more room. This is more of a sniper where, okay, hey, I think the market's acting really clean. Let me look, get short here. I'll give it a little bit of risk, but I could get paid very nicely if I am correct. So I hope that helps understand what the sniper trade is. It's a very powerful tool. Fibonacci's overall are very powerful. You've seen in all these videos where I'm just drawing them and things just magically line up. Okay. It's just understanding how the markets work. If I probably went from this high all the way down to this low, look at where we rally, right? Right up to the 61.8, and then we roll over. Okay. And sometimes you get anomalies. That's all part of trading. But think about this. We're in a downtrend, right? On the bigger picture, because we took out these lows. So this is just a bounce in a bigger trend to the downside. And so when we see something like this, right? We see a trade like this. It's kind of like, okay, hey, let's get short somewhere up here. And we know we could use this as our exit if you want to take more risk and all that. So that's it for this video. Thank you for watching, and we'll see you on the next video.